If you're about to quit trading, I know exactly where you are right now. You've been trading for a few months, maybe a year, heck, maybe even longer. You started with excitement and dreams of financial freedom, but now your account is shrinking. Nothing seems to work, and you're seriously considering walking away from not just trading, but something that you really learned to enjoy. That in and out of day trading or short-term trading, the bashing of buttons and charts, and now you've got to consider giving it all up. I get it. I've been there myself, and I've seen this exact pattern with thousands of traders. Here's what you need to understand. You're not failing at trading because you lack intelligence or because trading doesn't work. My guess is that a lot of you guys have been utterly successful, sometimes even dominant in many things in your life, from sports to career to your family, but now you're just stuck. You're stuck in the most critical phase of a trader's development. And what you do right now will determine whether you become one of the successful few or join the 95% of people who quit. So why do traders quit at 3 to 12 months? The psychological wall that hits after that initial excitement, it hits so personal and so hard. You come in, you buy some class like mine or somebody else's, you read all these books, book after book. You got your headphones on at the gym, you're rocking trading podcasts, one after another. You're reading all these books about habits, and you're like, man, I've put everything I have into this, and poof. Those big bucks I was expecting, they're not really there, even though I've put in all this kind of random work. Traders will have unrealistic expectations in that early phase. They will often equate, hey, I've done work in terms of consuming knowledge with, here, I deserve some money. I've earned money. And that is not the actual step and growth curve of what a trader goes through. And we all do it. We have that expectation because oftentimes we've been successful in our careers, maybe in sports, in school. And so we look at this and we say, hey, this is just a natural progression in what I do. I'm an awesome person. Therefore, I should be an awesome trader. And when those hits start to come in the beginning, and they're gonna come, it just floors us, right? It's hard to understand what just happened. You blow up that account, and it's like a dream. Like, how did I even get here, right? I'm a winner, and now my account's at 0. So let's talk about the unrealistic expectations. Just because you're good at something doesn't mean you deserve to win at trading. There's very deep processes that you have to go through. Beyond that though, one thing that people will often do is they have the ability to make money, but they want more. That's the real unrealistic expectation. I've got tons of students like that right now. I was talking to one of my students, Jessica, she'll get a giggle out of this. She is so talented. She'll make 500 bucks. And she's pretty new. She makes 500 bucks every single day in her sleep. But in her head, like she always wants that 1,000, 2,000. And one of the things I was telling her is, you'll get there, but that's an unrealistic expectation. So she makes 500 bucks and then she actually goes in the red a lot of these days because she wants that more. I said, Jessica, you've got to stack those $500 days for months before you start going for the 1,000. See, oftentimes people just think, oh, I made 500 bucks today, therefore tomorrow I should get 1,000. And the next day I should get 2,000. No. Do it for 90 days, 120 days, then come to me and say you can't get to the 1,000. You gotta have that consistency. So having realistic expectations is so important. Some common patterns of failure that new traders go through. Number one, they just jump in to live trading way too early. They watch 2 videos, they're like, hey, I got this, right? Boom, they put some money to work, they're in a rush, bam, the money is gone. Sometimes people actually study a lot. They read all the books, they do the podcast, they even come to class, but then they still jump into live trading too fast. I get this all the time. Well, I learn by doing. It's like, yes, you do. Why don't you learn by doing that simulator first? So you get the mechanics of it. See, the thing is when you're learning from a book or even some class like mine, is that you're looking at charts that are static. They're not moving. Beyond that, they've been cherry picked, right? When I do my classes, I'm not putting the ugly charts, right? I'm putting the most beautiful breakouts that I've ever traded in my life, in 20 years, right? I'm putting the pictures of all these beautiful ones, right? You ever see a post of like from Mark Minervini or one of these like famous traders that are like swing traders? Their charts are like all from the 90s, right? Like they're cherry picking the best trades they've ever had. They're like, I'm like reading through some of their books or blogs. I'm like, what the, from 96, right? Like this company doesn't even exist anymore. And so these are static things. So you need to go through that simulator to get better, to actually see the patterns develop in real time. Or, right, you do a market replay where you can watch it all, right? And you can just get a feel of how things move, but also the ranges that they move, like how much each candle can move. Does it move $1? Does it move $2? You need to internalize the exact size of movements too, those percentages of movements. Every stock has a different average true range. The other common thing that I notice with traders is that they're just oversizing. You know, they buy 1,000 shares of everything or 2,000 shares. Whatever they have in their account, they put in a trade. And they don't size the position dependent on risk, but also probability, right? If you have a toolbox of setups, for example, I have a toolbox of 18 different trading patterns between investing, cryptos, day trading, you know, futures, so on and so forth. Well, each one of those patterns has different win ratios. They have different EV, expected value. They have a whole different mechanics to it. And so there's certain ones that I have to trade really small because maybe I'm not trading those very well. And some of them I'm killing them, right? Like currently we've been doing these pullback trades where, you know, in the market you get a big thrust down and you're jacking into that first pullback into some resistance spots to play the flushes. Now, this is because the market has just turned recently, so this setup is working a lot more. Where, you know, a few months ago, it wasn't working at all, right? And so you have to kind of constantly be adjusting your risk parameters and your sizing to match what's happening. Common mistake that I see all traders make is the complexity trap. Holy crap. I'll do a class. I got my 60-day bootcamp. I'm on Bootcamp 74. I give everybody my chart layout. You know, I use moving averages, some stochastics, like some basic things. Hey, somebody will say, what about the MACD? Why don't you use the MACD? I'm like, I just don't use it. What about the RSI? Can I use all of these together? What if I add the pivot points to the MACD that goes into the RSI, that hits the Bollinger Band, that rolls into the flux capacitor, and then I switch from the 5-minute to the 1-minute and I sashay it through? It's like, right? Like, we can sometimes look at trading, we make it so complicated. Or you'll see somebody like post a chart and it looks like a Rorschach test. It's like trend line, trend line, trend line, like, right? Dude, if you grab a beer, close your eye, you could draw a trend line anywhere on a chart, man. You could be like, zoom, trend line, doop, trend line, doop, trend line, doop, trend line, doop. And you could have, a chart like a NVIDIA like this, and right, you've just drawn trend lines everywhere. And so we have this complexity trap. A pattern should stick out. If you've got to one-eye it, you're like, whoo, and tilt your head to see if there's a pattern, that's not the one. A great pattern should be like a kick in the nuts. You're like, that's something right there. Like you should immediately, you look at it and you're like, okay, I feel that one. That's hot. If you got to one-eye it, you got to tilt your head, you got to take a guess. More likely than not, you got to just toss it, especially if the market is not hot and you're just in like a sideways market or a little bit of a down market like we're in right now. Now, this phase is necessary for all you traders though. Maybe not the level of frustration. It could be a couple months or it could be a couple years. That's up to you. But this phase is necessary because you have to kind of clean out all the cobwebs and those beliefs, those limiting beliefs that you need to do this, you need this, you deserve this, that trading is hard, the chart's got to have all of this, I need more information, right? You have all of these things rolling in your head, And so you need this phase to just get it all out of your head to realize it's all just garbage, right? Simplicity is the best when it comes to trading, and clean everything is always the way to go. Most traders quit right when they're about to have their breakthrough. They don't realize that this frustration phase is actually part of the process. The market is testing your resolve before it rewards you. I see so many times in my students and in my classes, right when they're hitting that last plateau, that last ceiling, that's gonna take them from just struggling, breaking even, slight losses, to making consistent profits, they just give up, because that last step is the hardest step, right? That last step where you have to admit to yourself, you can't just skip the process. I was that way. I always believed in rules, but I never believed that the rules apply to me. I'm Kunal Desai. I can do anything. And so I love the rules. Hey, guys, follow these rules. But for myself, man, I'm Kunal Desai. Why would I have to do that, right? And we have that. And you'll see that in trading. You have to give up so much of like some of your weird beliefs, and it's that last step when you just say, screw it. I'm gonna study, I'm gonna journal, I'm gonna work hard, I'm gonna prepare, and I'm gonna be clean and manage my risk, and that's it. Forget all the other stuff. I'm gonna do it the way it's supposed to. But people just give up right at the end. Right at the end when they're about to make that turn. Don't let that be you. There are 5 critical mistakes breaking your progress. The first one is just overtrading out of desperation. People will overtrade for numerous different reasons, but often it's out of desperation. They get down on the day and they decide they need to make that up, and so they just start jamming buttons. They button spam. That is the quickest way to blow up your account. It's not always just like one big loss that blows up the account. It's that million different entries where you're just losing $100, $50, $100. You're like, you keep just adding it, pops up and then comes back down, you sell. You add it, pops up, comes back down, you sell. You add it, it pops up, comes back down, and you sell. And you're just trading out of desperation. And then what happens is, as the small losses pile up throughout the day, right, you have to take more and more risks, because for some reason, traders get in their head that they have to finish even on the day or green on the day. Guys, there's 5 days in the week, right? There's 22 trading days in a month usually. It's not a big deal to be red in the day. What happens is, like, I've seen it so many times. Somebody could be, I had a student of mine, he's down $5,000 the other day, made the comeback all the way, and he was down like $100. And I'm like, Joe, dude, how'd you lose so much money this day? He's like, dude, I made the comeback, I was only down $100, and I just kept pushing it, and finally my luck ran out, right? And then he ended up basically being back down $5,000. And it was just like that over trading out of desperation, and that just random thing of like, hey, I have to be green. Guys, green is just a color, right? Like, you don't have to be anything. Green is just a color. Our job is to make good trades. The second most critical mistake that's breaking your progress, lack of a defined and repeatable strategy. Guys, having a toolbox of setups that you have the rules for, right? It's like a checklist. A pilot has a checklist, right? Before the plane takes off. At least the good ones, right? You gotta have the same thing. You're trading quick pullback buy, boom, 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 I need to see these 5 things. Hey, I'm doing a VWAP bounce, boom, 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 I need to see these 7 things. Things, when it's written down like that, it's defined, and then you can repeat it. Most traders, if I say, all right, give me your recipe for the ORB pattern on stocks that have earnings breakouts. Well, you know, it gaps up, it goes sideways, I turn on my scanner. No, right? Give me the recipe, right? Like you're baking a cake. I got 2 pinches of this, 4 pinches of that, 400 degrees, 15 minutes, right? That picture perfect recipe. You have that, you've got a defined and repeatable strategy. And then once you just do that recipe 100 times, 200 times, right? You don't need the checklist anymore. You've internalized it. You are now a chef. Number 3, improper position sizing. You're just risking too much. Whatever's in your account, that's boom, in the trade, right? You're all in all the time. I can't even count how many students and traders I run into that are just on full-blown margin all the time. Guys, I'm on full-blown margin all the time too. But when I say all the time, it's when I see a very, very specific instance where my risk is tiny and the probability is just so beautiful and the reward is really justifies it. Okay, then I have an all-in setup where maybe I can risk like half of my day's max loss. Number 4, emotional decision making, right? You get caught up in the P&L trade. You get caught up in, what people are doing in your chat room. You get caught up in what's happening on Twitter. You get caught up in what's happening with the news, the Trumpster, the Biden, Putin, Zelensky, oh my gosh, right? And you're taking all this in and you're making emotional decisions with your trading. And then last but not least, you're jumping between different methodologies. You're homie hopping. Hey, I'm a swing trader. I'm a day trader. I get this all the time. So in our bootcamp class, we have lifetime access for my students. I'm a bootcamp 74 of my 60-day bootcamp. So 4,000 days of classes. I'll see people come into my class. I'm like, Johnny, where you been? Well, I got into options as I was in this guy's room, and then I tried this futures thing, and I'm in Apex, and you're like, huh? Like, I gave you the methodology, how to trade trends that applies to all instruments. Why are you, and it's like, they just jump around. I need this scanner, I need this news feed, I need this, I need that. I need the boots, the coots, the butts, and the cuts, right? When you do that, you're just the jack of all trades. You're not an expert at anything. You're not even really good at anything. Stop homie hopping on your strategies. The reason that you're stuck isn't because trading doesn't work. It's because you're making these 5 critical mistakes that are guaranteed to just drain your account and your confidence. So we've gone through a lot, but let's talk about the reset process. Starting fresh. The complete trading reset protocol. Guys, stepping back to gain perspective is so important in trading. Identifying what's actually working versus just jumping into what everybody else is doing. Jumping into the newest fad, the newest hot thing. That's not really where you're going to find your edge and where you're going to find that honeypot of skill and strategy that you've been searching for. Coming back, taking a step back, grab that perspective. Really look at your trades, journal them, find out what's actually working, right? That data review is going to be so important. When you simplify your approach drastically, you're going to be able to get the results. Some of the best traders I know, I'm talking about 7-figure traders, have often just 1 or 2 strategies. And they sit there and they hunt around for that mark. They hunt around for that setup. And then that's it. If it's not their market, they literally just sit out and they just wait. And then, of course, I think the paper trading rehab method that my students go through is so important. You blow up your account, and even if you just lose, I would say, 1/3 of your account, we send our students back to paper trading rehab. All right. Hey, you're in a slump for even a couple weeks. I nip it in the bud. Hey, you're not trading now. My mentorship kids, they lose 2 weeks in a row. Boom. You're in paper trading rehab. Pay your penance. What that means is they're trading live during the mornings. They are paper trading the market just like they would when they're live, but they're doing it without the pressure of money, and they're really just focusing on their technique. Then they journal the entries. Then what they do, and this is the key to the paper trading rehab, they go on the market replay simulator at night or in the afternoon. I give them 10 tickers. I say, you know what? I want you to paper trade these tickers on these days on the replay simulator and get some more reps. So we take that weakness that they have, they simulate it, and then they replay it even some more. And we try to get 100 repetitions of trades through the replay and through live paper trading, and then boom. If the results are there, okay, you're back live. Before you quit, you need to hit the reset button. This isn't about trying harder with the same approach. It's about completely changing how you're approaching the market. Now let's talk about the minimum viable trading system. Stripping trading down to its essential components is so important. Finding out that one setup approach to mastery. What I want you guys to do is say, you know what? I'm not where I need to go, but I'm gonna dig things down to one setup. I'm gonna find a setup that speaks to me, preferably something at the open. There's only a handful of things you can do at the open. You've got red to green trades, ORBs, quick pullback buys. You could do some kind of pre-market breakout setup, but those are a little bit more iffy. But I want you to pick one. And then I want you to tear apart that setup down to granular detail and really learn everything you can about it. How to find it, how to enter it, how to size it, how to exit it. And then repeat, repeat, repeat. Then you go on your TC2000, you set up a scan so that you can find that all the time. Go on the market replay and replay that type of setup all the time. I just recently did a moving average pullback video. I think that's a pretty good setup for somebody that's new. Go and check that out. Then I want you to come up with some risk management rules that stop the bleeding. You're gonna reduce your size to the point where, you know, even if you lose 5 times in a day, it's no sweat off your back. You wanna be process focused versus outcome focused. What I mean by that is that if you just focus on making good trades and good entries, then everything else works itself out. Then you gotta build out a daily routine to rebuild your confidence. Confidence comes from competence. But when you put in that daily work, that preparation, that routine, that will also build your confidence. You're gonna have a lot of confidence in the markets when your prep is so good and you've thought of all the angles. And then you simplified your approach to that one pattern, that one setup, and you know everything about it to granular detail. What you need right now isn't more indicators or strategies. You need a stripped down, simple approach that lets you focus on execution rather than complexity. The 30-day rebuilding plan. Week 1, strategy definition and simplification. You're gonna spend that first week defining your strategy and picking out that one hot pattern and breaking it down into granular detail. Week 2, you're gonna hit that paper trader. You're in paper trading rehab. You wanna focus on execution, execution, execution. The most important thing in trading is not your risk management and all of this stuff, it's getting good entries. You got a great entry, everything flows from there. You know when your risk management stinks? It's usually when you chase a stock and you have bad entry, right? Anytime, right? You're never big when you have the perfect entry. You're always too big when you have the bad entry. Week 3, small position live trading. I'm talking about, let's start with like 50 shares of stuff. Something real small. Get your groove back, build that stroke back, right? And then from there, start to increase it slowly. Week 4, performance review and adjustment. Week 4, you're gonna do a deep dive. I use TradeZilla for my journals. It tracks everything. Guys, it's got everything. And I'm not associated with them. I just send my students there. It's a fantastic journal and it'll give you every metric you can known to man. Specific daily exercises for each phase. I'm gonna give you a step-by-step 30-day plan to rebuild your trading from the ground up. This is what I do, guys. I'm the stock doctor. I build traders, but I also rebuild them. This is the exact process I've used with hundreds of students who are ready to quit, but now are consistently profitable. Look, I know how close you are to giving up and how painful and damn frustrating trading can be when nothing seems to work. But I've seen too many traders quit right before they would have broken through. Don't be one of them. Follow this reset protocol for 30 days. Simplify your approach. Focus on process over outcomes. Give yourself this one last structured attempt before you walk away. And if you want to see how we implement this exact system in our trading room, click the first link in the description. We've helped thousands of traders push through this exact phase to find sustainable success. Look, trading isn't easy, but it is worth it if you can push through this critical barrier. I believe you can do it.